Welcome back, everyone. Michael Rosmer here with Offshore Citizen. Today we're going to talk about avoiding social contributions when at all possible, and we're going to look at this from the standpoint of countries like Serbia, countries like Portugal, where the NHR program is one of the concerns people have, countries such as Slovenia, where that's a concern, etc. In general, this whole problem where a lot of people are sitting there saying, hey, listen, maybe the tax rate is only 20%, maybe it's only 4%, maybe it's whatever, but then I get hit with all these socials on top of this, my tax rate ends up being 50%. What do I do about that? I'm going to cover that with you a little bit today in terms of some of the strategies you can use that a lot of people aren't talking about. I don't know why they're not talking about them, but they can be helpful for optimizing in this regard. And requires a little bit of creativity, but nevertheless is perfectly feasible. So before we dive into that, if you haven't already, please hit the subscribe button, hit the notification bell. We love for you to subscribe. We appreciate it very much. Thank you so much. Make sure you don't miss out on any of our future videos. If you like the videos that we're doing, please share them with your friends. We really appreciate it. I'm trying to grow this channel, trying to get good content out to you. So all the support that you have is very much appreciated. And if you want help with international structuring, with how to pay the lowest legal amount of tax possible, with setting up international companies, with opening bank accounts, with getting residency permits, with getting citizenships, unofficial citizenships, any of that kind of stuff, please reach out to us. You can book a call, clarity.fm/Michael Rosmer. There's a link below, or you can check out our websites, offshorecitizen.net and offshorecapitalist.com, and you can send us a message through there. Okay, so I think one of the things that became really apparent was just in the last number of months in Serbia, there became a big problem where all kinds of people started to have issues with the government because the government basically came and said all these freelancers who are making money online, who were in some cases not paying taxes, etc., were going to be retroactively taxed on the last 5 years, potentially not just for the taxes that they hadn't paid, but then all kinds of socials. And one of the things that a bunch of people complained about is they said, hey, we didn't get access to these social services for 5 years, but you're busy wanting to apply those fees to us. This doesn't seem fair. And for those of you who come from a country like, say I'm from Canada originally, so in Canada, the socials are minimal, right? You have EI and CPP. CPP is 4.95% on the employer side and 4.95% on the employee side. EI is, I think, 2.1% on the employer side and a little bit less than that on the employer side, or sorry, other way around. A little bit lower on the employee side than it is on the employer side. Anyway, so it doesn't add up to a massive amount. You end up with 10%, but there's some areas where the socials are like 70%. It's ridiculous, right? So that's between employee and employer. And if you don't have an employer paying, then you end up being hit with both. So it's completely unreasonable. And I view it as just an additional tax, right? I always thought, hey, listen, if I have to pay CPP in Canada, well, that's basically like they're dinging me with an extra 10% tax or whatever, right? So that seems terrible. I'm already overtaxed, so to heck with this. And so I'm going to talk today about some of the things that you can do if you're moving to some of these countries in order to potentially end up with some lower taxes. And it depends. It's all country by country. I always tell people when it comes to tax planning, it is very situation specific. So for some people will ask in the comments, and I appreciate the comments, thank you. But some people will ask like, hey, well, what about this situation? I say, well, the details of that situation really matter. So it's hard to kind of give a concrete answer without going through the details. So usually when we work with people, we collect a whole bunch of information, we have some phone calls, we get a bunch of details answered, we build a report and we go through and we say, okay, great, based on all these facts, here are the scenarios and here's what might work best and here's why and here's how these compare to each other and all the other things. So that's really valuable and I would encourage you to kind of take that deeper look. Again, you can reach out to me if you have questions. But today I'm going to give some examples of things that you can do that are helpful. And I'll use Canada as an example, I'll use Serbia as an example a little bit, but the truth is these work in a bunch of different regards. So for instance, if you're in Canada and you have a vehicle, right, you have the ability to get paid for mileage up to a certain amount tax-free, okay? So this can be 100% write-off for the company and tax-free income for you. I think it's like $5,000. It used to be $5,000 a few years ago. I haven't checked it recently. So that's an example of something where, oh, great, there's this expense that's incurred that you can basically get paid for without having this income that's going to be subject to all these other fees, right? So that's good. In fact, sometimes it's not subject to tax because it's just an expense. So definitely think from that standpoint, okay? Another thing that you can do is you can get paid for things. So very often Somebody had said, I think it was in the comments of one of our videos, they were asking about socials on dividends. So dividends aren't subject to socials, okay? So how your income gets characterized is really, really important, okay? Do you take dividends? Do you take wages? Is it royalties? Is it something else? Sometimes you're in a situation where maybe you should say, hey, listen, I want royalties income. Sometimes that doesn't make sense. Like usually when working with clients, we say royalties income is bad because it's usually subject to withholding tax somewhere. But on the flip side, if you can be in a situation where it's not subject to withholding, then you could go and say, take advantage of something like the Portuguese non-habitual residency regime, get royalties income and not pay any tax on that, which would be better than turning around and having an earned income of 20%. And maybe you can have a blend, right? Another example is a company could rent things from you. So let's say I'm in Serbia, right? I'm getting paid a wage from my employer. Okay, great. Well, the wage is going to be subject to socials, right? You're still going to pay tax in this scenario, but you could say, hey, listen, well, I'm providing my own equipment, right? I'm sitting here in my home, so really, realistically, there's some sort of office space. I have a computer, I have software, I have a phone, I have whatever, maybe those should be rented out for, a few $100s a month. And all of a sudden, that's income that isn't treated the same way. So people can really get quite far ahead by thinking about different ways of characterizing the income that they're earning and finding ways to optimize that. Other examples of this are if you're in a situation where you have some cross-border issue and you're saying, hey, listen, well, this could be royalties income. Let's find a way to make it services income or sale of a product income instead so that we aren't subject to withholding. Or in some other cases, maybe there's no withholding taxes on royalties, so royalties make a perfectly good sense, right? So all of these you need to kind of think about. But what I want to impress upon you in this video is that there are ways to work around things like the socials, at least on a portion of your income, which can end up being really tax advantageous to you in terms of like the actual amount of money that you keep in your pocket at the end of the month. And this is true in most parts of the world. You can find some ways of making this work, especially when you're dealing at arm's length, when you're at a distance to, say, an employer. It's a little bit harder when you own a company, you're paying yourself for it. There's still plenty of room for that. I think about my parents, they had, they would store equipment for my parents' business on their property. So, okay, great. Like, is the company paying you for that? The company should be paying you for that. You might as well, because it's an expense for the company, it's income for you that's not going to be treated the same way. So you can have lots of examples like this that people aren't thinking about that they add up. And you can take advantage of that. Likewise, if you have travel expenses, right? If you're having an employer who's paying some of these expenses for you, that's advantageous. So anyway, I hope those things are a little bit of some ideas for you that can help you out with working around this troublesome issue of socials. Again, to me, the idea is how do you keep the most amount of money in your pocket at the end of the month? And there's a whole variety of different tools. Here we talk lots about forming international companies and allocating income abroad and setting up a foreign office and hiring people outside of the country and all this kind of stuff. And when you're at scale, that makes a lot of sense. But when you're smaller, it makes a lot of sense to take advantage of some of these simple things that have no structural costs but have potentially fairly big benefits. So I hope that helps. If you have any questions, put them in the comments below. If you have things that you'd like to see, also put them in the comments below. If you liked the video, give it a thumbs up, share it with your friends. If you didn't like it, tell me why. And yeah, if you're interested, please sign up on the subscribe button, the notification bell, reach out to us, and I'm going to see you guys on the next video.